Bitcoin is like that. It's like a lot of things, but it's so much more. And one thing that we see that it is digital capital. And because it has, fixed supply, it allows us to store wealth, a Saylor would call like digital energy in a battery that doesn't leak. It can hold that energy for thousands of years. So, well, what does that do?
Think of Bitcoin as crude oil or raw energy entering a refinery. From that base resource, we can create countless products, fuels, plastics, chemicals, and more. Likewise, Bitcoin can be refined into financial products that serve different purposes, from fixed income to yield-generating instruments. This is where companies like MicroStrategy and newer ventures such as Satsuma are innovating. They're creating ways to generate returns and yield not from debt or risky cash flows, but from Bitcoin itself as a fully collateralized asset. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
I would almost break people into two categories. And I think we have creators and we have consumers. And creators build. We create value. And so you have to take a long-term approach. Most business builders will typically give you like a 10-year frame. It's why venture capital funds typically have a 10-year lockup, right? So you have a 10-year lockup because we know
private
that it's going to take
too. Yeah,
and
private equity years. Yeah.
Yeah, we know that it's going to take 10 years for Uber or Airbnb to get big enough to a point where they can go public and have a liquidity event. And so you can't trade it in between that time frame. Give us 10 years to build it. And so a creator has that time frame. Michael Saylor, when he wrote his books decades ago about the rise of these digital monopolies, he talked about 10-year time frames. If you hear him talk today, he's always talking about 10 years. He says, like, I can't tell you past 20, but I think in 10 years. I got my start in real estate, and I was flipping homes. Those were like year projects. Then I started building. Those were like 5-year projects. So for me, it's like I typically think in like 5-year time frames, but 5 or 10 years. So you said like the conviction. Yeah. Like if you're going to build a company and think 10 years out, you have to have the conviction. So I'd say that. But going back to the point that you made about companies putting Bitcoin on the balance sheet. So let's just start with that right now. So what Saylor calls digital capital, right? And so, I mentioned I started some tech companies. I started a high-tech medical equipment company that I sold off to the largest company in the medical space. And we created these things called digital x-rays at the time when nobody knew what those were. And we helped push like paperless offices, which was crazy back then. And so what happens is whenever we have a technological revolution, the new piece of technology gives us this new building block. And that new building block allows us to build things that we could never have imagined. And so people typically think of things like in a vacuum. And so, and we also our brains are comparing mechanisms. So it's like, oh, what is this electricity? Well, it's sort of like a way we can have a digital candle. Well, I guess it's like a digital candle, but of course it's so much more. So when we think about Bitcoin, we think like, well, what is it? Well, I don't know. It's kind of like a digital gold, and it's kind of like, right? So it's kind of like a lot of things, but it's so much more. And when we have that new set of building block, we can build things we couldn't imagine. So for example, back to the internet days, there was all types of magazines and newspapers that were saying like, it'd be like a virtual town hall one day. And, maybe we'd buy things online one day. And so what we were taking is things we already knew and imagining we could do those things in a new way on the new technology. But what we didn't imagine was that our cars would be hooked to something called a cloud using something called social media to navigate us and drive autonomously, because we didn't have a social media or a cloud, right? And so Bitcoin is like that. It's like a lot of things, but it's so much more. And one thing that we see that it is digital capital. And because it has, fixed supply, it allows us to store wealth, a Saylor would call like digital energy in a battery that doesn't leak. It can hold that energy for thousands of years. So, well, what does that do? What could we do with something like that could hold energy for thousands of years? Well, it transforms businesses. So right now we see all these corporations that don't know what to do with their cash. Warren Buffett's got, whatever, $300 billion of cash, doesn't know what to do with it. But more specifically, we look at a lot of operating businesses. And so they don't know what to do other than destroy their capital, which is, I guess, we'll either just give the cash back to our shareholders, or we'll just buy our own stock back, or we may try to go do M&A on some companies that we don't know what we're doing and put that cash at risk, versus if they could just store that. And so that fundamentally transforms a company and extends the time frame. So I think that's number one. And to your point, you said that, every company should put Bitcoin on their balance sheet. So I think just that right there is fundamental, and that's important, but that isn't really what a Bitcoin treasury strategy, like what Strategy is doing and like what all these other copycat companies really are trying to do.
Okay, so let's break that down and why what they're doing is important and how there's going to be demand for an infinite amount of those.
Yeah, thousands of them. I don't know about infinite amount, but thousands of them for sure. And so really, this is where I think almost everybody has missed what's actually going on. I mean, a few of us, you deep in the weeds, you understand this, but when I see articles on FT or BBC, and I just like, man, they don't know what they're doing. We're talking about. So now that we have this new building block of, yeah, you laugh.
I'm laughing because I only know because you explained it to me, like, privately and a few other people. So, it's not that easy.
I saw your recent interview with Saylor on stage. That was pretty good. So you and I you and I have hung out at his house together. So I know you're getting the inside, but most people don't, right? So you have this digital capital, and now what can we do with it? Well, one of the things, as I said, is I could extend the life expectancy of a corporation, but what else could we do with it? What we're seeing now is the invention and the creation now of what's called digital credit. And so the analogy is sort of like a power station or a refinery where I would bring in a raw base asset like oil, but what do I do with the oil? Well, we create things from the oil, right? So it could be different types of fuel like kerosene or jet fuel or diesel fuel or regular gasoline, for example. Pick which one you want. But it could also be other products like acrylics or plastics or petrochemicals. So we take in a base asset and then we create new products from it, or think about like a digital power plant. So it takes in raw energy, it could be coal or gas, and then it could create different types of energy at different frequencies, different hertz, different rates, things like that. So that's what we're starting to see. Now, when we think about digital credit, we think about how do we take this asset that's now highly volatile, but also, well, it's highly volatile, which is good and bad, right? So it goes up, it's highly volatile to the upside, but it's also highly volatile in the short term. And how do we create this digital credit? And so Saylor has given us the model that all these other companies, 100 of them now, are trying to follow. I'm involved in a couple of them. Satsuma, we're launching in the UK right now. And so we have 4 products: Stride, and Stretch. Let's just talk about Stretch for a second, because this is so revolutionary that most people can't grasp this.
Bitcoin represents a new base layer for value storage and energy transfer, a perfect, incorruptible digital battery that never leaks. It holds economic energy across time, immune to inflation or decay. For corporations, this changes everything. Instead of sitting on depreciating cash or destroying shareholder value through buybacks, companies can now store their excess capital in Bitcoin, preserving wealth indefinitely and extending their corporate lifespan. That's why Saylor calls it digital capital, an asset that holds and compounds energy over centuries.
The biggest market in the world is fixed income. Over $300 trillion. 145 trillion of that is tradable, securitized fixed income instruments. Who needs that? Well, 250 million retirees just in the developed world alone. They need it. Businesses need it, right? We need liabilities that can match that. And so we need fixed income to pay bills, to pay expenses. We invest money and we need the income, right? And so typically that would be paid. I would invest in fixed income through debt. It's credit, right? So I buy a bond, so I'm loaning you money. You agree to pay me back a coupon. It could also be I'm buying a dividend stock like AT&T. Now, the entire stock market is based off of discounted future cash flows. right? Companies are valued based off of PE ratios, the price to earnings. What will their earnings be in the future? So we're buying companies based off of how much earnings or cash flow we think they'll have in the future, or I'm buying a bond or a debt loaning you money based off of your future cash flow and your future ability to pay me. That's how the market works. You have to understand that so you can understand how revolutionary this is. Now, the one question I'd have is, what if you can't pay me? What if you don't have those future cash flows? And with AI right now disrupting everything, the probability of you not having those cash flows to pay me back either on the debt or from the dividend in the future is going higher every day. So maybe you pay me back the cash flow. Maybe, I don't know. What kind of business are you in? What's the probability it'll be disrupted? What MicroStrategy is doing, is something completely different. They're not agreeing to pay you off of future cash flows. They have the asset. It's coming off of an asset. So as they just did their quarterly meeting yesterday, their Q3 meeting, they have over 100 years of capital to pay you right now. So based off of the obligations they have to pay, if they never took in another penny, no cash flow, they could pay out 100 years. That's not how the traditional financial world works. But here's where it gets even more interesting than that. Because they're not paying you off of cash flow, future cash flows, it takes the risk away, number one. But number two, with Stretch, for example, they're giving you those dividends and they're essentially tax-free. We can get into the semantics of that, tax deferred. But the reason why is because they're not paying you from cash flow. It's technically a return of capital. So now I'm getting 10.5%, which is more than double what I can get in the safest fixed income instruments like US Treasuries and bonds, etc. It's even safer because it's way over collateralized with assets.
5x on Stretch, which is the least, right? So,
right,
yeah.
5x on assets. The other ones don't have the backing. It's hopefully maybe you'll have the money in the future. I don't know. And then it's tax-free. So instead of 10.5%, the yield they just increased it. Instead of 10.5%,
yeah, he called it like 17.5 in our conversation. I think
it depends on what your tax rate is and your income and all that.
Yeah.
So it's 16
blended.
16 to 20, right? Let's just call it 16 to 20. So then you have that. So like this is a completely different system. And we're just starting to see this, the surface of this being scratched. Like this is going to transform everything that we know about finance. We can just start with that. Like if you don't believe in Bitcoin's long-term, value appreciation, then of course none of this matters. And so we can get into that if you want. I'm sure most of your listeners already have jumped that hurdle. But I'd say just back to what you said about the 4 products that he has. First, of course I agree with him. I mean, he's a genius. Who am I to disagree? But I'd say actually a little bit, maybe I might just add nuance to that, is that those 4 products are different products. So when somebody says, hey, Mark, what tool should I use to fix my car, a wrench or a screwdriver? I'm like, I don't know. What are you trying to do? Because those are different tools. And so Strike, which is at the top of the stack, is way different than Stretch. They're for different people, for different use cases, trying to achieve different things. They're not the same. So Strike gives me it's a call option. It gives me the ability to have capital gains and I get income at the same time. It's like a dividend paying stock. I buy AT&T, I get a coupon, but it also goes up in value, hopefully, maybe. So Strike gives me the upside and I get cash flow while I'm waiting, but I have to deal with the volatility. So so the way that most people should think about this in their money and portfolio allocation is time frame. So, most people shouldn't be buying Bitcoin unless they're planning to hold at least 4 years. Of course, forever is the better time frame, but at least 4 years. But what do you do with money that you need in shorter time frames? So you need less volatility. So the shorter time frame you need the money, the less volatility you can stomach. So I might say, well, okay, so Bitcoin for 4 years, for 2 or 3 years, I'll take a Strike because I want that upside potential, but I'll take the 9% instead of the 10.5%. But then I have short-term money like 6 months or 12-month money that I keep in my business that I can't stomach volatility with, so I'll put that into Stretch.
Yeah, it's like a short-term treasury. It's like buying a 30-year bond versus a 3-month or 1 year or whatever.
That's exactly right. So you think about it in time frame.
Bitcoin as digital capital gives us the foundation to build a more stable, transparent, and durable financial system, one that rewards patience, innovation, and conviction. We're only scratching the surface of what's possible with digital credit and Bitcoin-backed finance. But one thing is certain, those who understand it early will be shaping the future, not chasing it. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.